Hello and welcome to the Crypto Jungle. My name is Baloo, and here on the channel I keep crypto simple. We look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button? I stream every Monday, Wednesday, and Friday. So if you're new to the channel, I want to welcome you in. In today's video, we're going to keep it pretty short and sweet. I am kind of losing my voice. I know it doesn't sound like it right now, but I've got a little tickle in my throat, so I'm going to keep it relatively short and sweet. And honestly, the market really is just consolidating. So going too deep into the charts right now, there's not the signals that we're looking for to really give us a bias one way or the other. We've been holding support for a long time, and nothing has really changed. So without any further ado, let's just go ahead and take a look at the king of all cryptocurrencies, and that is Bitcoin. Just got our daily close a few moments ago on Bitcoin here, and we can dive into this consolidation right here. But what I want to first point out is just the fact that this consolidation right here, this consolidation is coming on falling demand, falling supply, falling demand, falling interest overall. There's less and less trading volume. There's less and less activity. There's nothing bullish about volume structures that present themselves in that way. It's nothing to be scared of because you're not seeing an increase in the supply side, but it's nothing to get excited about because there's no increase on the demand side as well. So just simply consolidating. Where we head to next, I think my bias is a little bit further to the downside. That's strictly coming from a technical standpoint, and the fact that this consolidation is showing inconsistencies in its rallies and reactions. If we go down to the smaller time frames, let's go down here. Let me get rid of that. And let's analyze some of these rallies. So, we have this most recent rally here that came on diminishing demand. We got this rally right here, an even weaker rally, and just, again, less interest, less demand. It's just boring old price action that's really not giving us much. I would be looking for a move potentially down to test again. If that test holds, and then after that, we start to see the volume come in, we start to see demand come in, then the likely outcome is a breakout to the upside. Now, if we test here and the volume doesn't come in and we start to drift down, I think if we broke below this wick of the potential spring, which is a very weak spring, I might add, we'll probably conclude this as redistribution. This is our phase C event, and we'll be heading down to lower levels somewhere around $20,000. Problem with that is everybody says that we're heading to $20,000. So when everybody is saying that we're heading to a certain price level, the trade becomes a little crowded. So it's hard to say as to whether we actually get down to those levels. A little bit of fundamentals on the on-chain analysis is we do have an increase in the overall activities of the Bitcoin addresses. So that's typically a good characteristic of a continuation of a healthy market. A lot of the on-chain data is not supporting a bear market. The technicals on the charts are telling us bear market. So, just because you have technicals saying it's bear market, it doesn't have to be bear market. Now, what am I saying here? What do I mean? What are you talking about? There's a bear market. So when we're on the macro, we have highs, lows, lower highs, lower lows, lower highs, lower lows. So, technically speaking, we're in a macro downtrend. That's a bear market. That's the definition of a bear market as far as I'm concerned. Every time we make it advance, it is followed by lower levels. That's, from a technical standpoint, what we're looking at. Now, going back to the fundamentals, there is an increase in adoption, there's an increase in new wallet addresses, there is an increase in OTC activity. There's a lot of on-chain data that doesn't show us the characteristics of a bear market. So it's kind of a wait and see. We're going to have to see if, there's just some level that everybody's waiting to hit before the interest comes back into the market, or if we just need to get the confirmation to the upside before the whales and institutions start to invest as well. But at the current prices that we're at right now, nobody cares. And we can see that in the volume. The volume is just overall diminishing. I feel like Satoshi booming with my hot tea and honey locked and loaded. Yeah, my throat's hurting today. Okay, so let's go ahead and take a look at Ethereum. Ethereum, same sort of weak structure. You know, the last couple days, a lot of people getting really bullish. We have this rally here, followed by a weaker rally. The reaction was not super strong, and this reaction is relatively similar in its strength, but it's the shortening of the rallies that concerns me, and just the overall volume is just down. You know, there's no interest, nobody cares. You know, that's basically it. When there's not a lot of selling volume and there's not a lot of buying volume, it just means nobody cares. So there's a lot of money potentially sitting on the sidelines. What that money is waiting for, we will have to see. Usually it's waiting for a dip. You get into that value zone, one last shakeout to scare all the retail investors. The whales will step in, they will lock up the supply, they will start to, you know, they will begin to inject capital. A lot of institutional buyers from traditional finance, it takes them a lot of time to get their ducks in a row. So maybe they missed the first Bitcoin move and they're preparing for the potential next Bitcoin move. It's a little bit of speculation, as we don't have you know, access into that world outside of the price charts. But yeah, thanks for the Axie tip. Made a nice packet. Nice, well done. Yeah, let's take a look at Axie Infinity. So this has been the only one that's really been performing well. We got a bullish cross on the alphanumerics indicator, which preceded our call out inside of the VIP group. The whole market's not moving, but Axie Infinity is moving, and it's because of the fundamentals of the demand for breeding. So Axie Infinity made an announcement that they are going to increase the breeding cost for every breed to go from 2 AXS to 4 AXS. So as a result of that, there's been an increase in demand, as this token is now, you know, required. You need twice as much of it to do what you were wanting to do before. So I scooped some up right around here before we broke out of the channel. Made a shout out to the group. You got the notification in the group around 525, 550. I think the final shout out was at around $6. So you're sitting pretty right now. We did get a flash to take profits right here as we hit the $10 mark. But we're having a nice consolidation, nice healthy consolidation here. So yeah, it's looking really good, and we're seeing some strength here again on the daily. So what's to say we don't continue up? The demand is really strong in this one. You know, it's really the only crypto I'm seeing that's having this bullish of price action, and it's because I've said this before, the Axie Infinity ecosystem seems separate from crypto in a lot of ways, because it's kind of a different economy there. So it's kind of performing separate. Let's see what the I don't get how the old hands are on a short-term uptrend. Willy Woo posted it. I don't get how the old hands are on a short-term uptrend. Yeah, so when you have whales accumulating, it doesn't necessarily correlate with price. So what dictates the price is the order book. So if you have, it looks like Axie wants to pump here. If you know, OTC doesn't affect the order book. If whales are accumulating, it's, you know, depending on how they're getting their Bitcoin, it may or may not affect the price. But when you're doing the on-chain data, what you're interpreting is the wallet addresses. So the wallet addresses isn't showing you, hey, this person went to an exchange and they placed their orders in the order book and they did this, that, and the other. No, it's just saying that the balance amount and the activity inside of their Bitcoin wallet is increasing. So that can happen from OTC. So it may not correlate with the price, but behind the scenes, we are seeing that accumulation. It's just not showing up yet on the order books. Yeah, Axie looks like it wants to go here. I wouldn't be surprised if we get another leg up in Axie. Not financial advice. You got to do what you got to do. But if you are interested in some of these other calls that we have, join the links down below. VIP group is still at the discounted rate because I am just lazy and I haven't changed it. What are your thoughts on the probability that we will go into another bull market in the next 6 months? It's been the narrative of so many YouTubers following the stock to flow model. I think that there is a probability that we can get a continuation of the bull market. What time frame that happens, I really don't know. What I'm waiting for, so the thing about technical analysis is it's not intended to predict the future. It's intended for you to interpret the present so that you can position yourself alongside the present. So if I am bullish on Bitcoin, I'm not trading right now. You know, there's no trade here. It's only at the point at which the trend begins to reverse. So what that might look like is, you know, you get a break out of this channel, breaking above this high, coming back down and testing a new higher low. Now I'm positioned alongside the trend. The time frame associated with when that happens is irrelevant. And the time frame associated with how long a rally occurs is also irrelevant. All you're doing is you're just positioning yourself alongside the trend as it presents itself and shows itself in the market. So when we are in a bull trend, when we're making higher highs and higher lows, there's no time frame for me that says we will stop at this point. As far as I'm concerned, we can continue to rally for 10 years, 20 years, it doesn't matter. But the point at which the trend changes is the point at which I, start hedging, start moving assets around, start selling off high risk altcoins, all of that stuff. It can happen in a month. You get 1 month of bullish price action and then it turns. It can happen in a week. You get 1 week of bullish price action and then it turns. So putting time parameters on it for me doesn't really matter. A lot of YouTube influencers try to lead people into their audience thinking that they are able to predict things and that they are able to see things that others aren't able to see. And I think that that's just kind of playing into the human emotion where humans want answers. And markets don't give you clear answers. The only answers that they give you is where we are today right now. That's it. Okay, so, when you get like Carl in the Moon saying, oh, exactly as I predicted, which by the way, he gives both outcomes every single video. So of course it's exactly as he predicted. Or the, Crypto or, whoever the case may be, they speak in absolutes in an uncertain market. And it kind of, it makes me laugh because people buy it. They fall into this trap of thinking, man, this guy's good. He's able to predict it. But they're not actually going back and looking at the videos and seeing that, they're talking about all outcomes. So, of course, one of the things that they say is going to be correct. But the fact that they speak in absolutes is where they get a lot of their viewership. So time parameters, they don't matter. When the trend changes, we're bullish. We will be bullish until we aren't bullish. When the trend changes bearish, you will remain bearish until we're not bearish. So where are we right now? We are in a bearish trend. I am going to remain bearish, which in this circumstance, I'm not shorting, okay? I'm not shorting because the on-chain data doesn't support the end of a bull market. So my choice, my strategy is I'm not shorting this downtrend because the on-chain data is showing us accumulation. The technicals are saying trade short. We're in a downtrend, trade short. That's what the technicals are saying. But I'm ignoring the short opportunity just because of the fact that the on-chain data is in, disagreement with that. As soon as we start to go bullish, I will trade bullish. And that will remain to be the case until the trend changes back again. So, I hope that kind of makes somewhat sense to kind of show you what I'm talking about here. basically, you know, as long as we keep making higher highs, like this can go on forever. This can go for 20 years, or it stops and then it goes back down again. Okay. As soon as it goes back down, as soon as you get that lower high, you can start to hedge out the risk. You can start to reallocate. If you guys want to learn more about this kind of strategy, learn the Wyckoff method, learn about the alphanumerics indicator, which comes with your membership in the group, which gives you bullish and bearish signals. If you want to take a lot of the kind of thinking out of it, you can just simply trade that indicator, the bull and bear, buy when it's bull and sell when it's bear. Then join the links down below. We'll get you signed up and in the group today, and we will help give you a lot of clarity in this market. Because, you know, if you're getting all of your information from YouTube, and here I am on YouTube providing information, YouTube is a place for me to advertise. If you're getting your financial information off of YouTube solely, you are being played in a lot of ways. Depending on the channel's angle, you're kind of being played in a lot of ways. So what we teach in the group is we teach you how to think for yourself, and we teach you how to analyze the charts on your own so that you don't even need the group. Excuse me. So if that's something that interests you, if you want to be self-reliant inside of this market, that's what we teach. Talking about that metrics, alphanumerics. What percentage are you sitting in cash waiting for the reversal? Well, you know, I've got different pots of capital. The ledger doesn't do anything. The ledger is just my investment account, so it just always stays the same. I would I would say I'm probably 30 to 40% across the other accounts in cash. And then, you know, sitting with, yeah, it's about 30 to 40%. It's a good amount. It's not 100% because I feel as though I missed the opportunities to get into 100% cash positions on the trading accounts, but it's a healthy cash position. I'm just in stasis right now, just waiting. Yeah, alphanumerics. You get the indicator as part of your membership to the group. Do you see the possibility for a complex spring, maybe to the mid 20K level? So I see the possibility of anything. You know, we could head down to 20K, but here's the thing that I want to caution you against. We're in a downtrend, okay? When you use the word spring, you're saying that's the bottom. You're saying that's the bottom and we will continue to the upside when you use the word spring. That is the wrong approach when you're in a downtrend, okay? When you're in a downtrend, it should be looked at as a sign of weakness with a continuation to the downside. Don't try and predict a trend reversal just because you hit a certain level. If we are in a structure that is making lower highs and lower lows, your bias is that it will continue to make lower highs and lower lows. A spring comes with that thinking, that hope, that that was it, now we're heading to the upside. You don't have an actionable event to participate in an uptrend until the trend changes. So it would be a potential spring. You could note it, the most bullish case you could say is it is a potential spring. And it's only until the spring confirms, meaning there's a change of character where the demand is coming in and we're making higher highs and higher lows, then you have an actionable circumstance where you can position yourself alongside the trend. Not before. If we head down to lower levels, I'm not calling that a spring. That's a sign of weakness. We are falling. We continue to make lower and lower moves. So I'm not going to put any bullish label on that whatsoever. It's only at the point at which the trend changes that I will flip the bias and be like, okay, well, here is a bullish possibility, but it's not a probability. What time is it in Bali? It is 8:23 a.m. Roosters crow all day. Yeah. Yeah, it's Tuesday, 8:23 a.m. on Tuesday. Okay, let's take a look at total. What about a flash crash and V-shaped recovery? Again, you are you're assigning a value to an event that hasn't happened. So, you know, if we went down to 20K, you're asking about the possibility of a flash crash and V-shaped recovery. If it presents itself as a flash crash and a V-shaped recovery, now you have an actionable event, but you're not buying that. You're not buying that because you're in a downtrend. So, you know, if you bought it, you would be just gambling, okay? You're not, you know, you're just front running a bullish idea before it's had its confirmation. So you would be just, you know, gambling. Is it a possibility? Yes, of course. Yeah, of course that's a possibility. But anything's a possibility. We could just shoot up from here. It doesn't have to be a spring. It's about just looking at the events as they happen, when they happen, and interpreting them. We're in a downtrend. If we break the downtrend, we've broken the downtrend, but we haven't broken the downtrend. So seeing an event that goes to a lower level is simply an event that goes down to a lower level, which is a continuation of the downtrend. I'm not positioning myself bullish in the circumstance of a continuation of a downtrend. Does that make sense? So taking a look at total, again, looking kind of floppy, looking kind of shitty. Really, the charts from the technical side, the charts look gross. So, you know, the total market cap is no different. It looks like we were ready to kind of roll over. Yeah, you can catch a falling knife in an uptrend, but, you know, catching a falling knife in a downtrend is just irresponsible in my opinion, because trading is about probabilities, okay? If we're in a downtrend, the probabilities of continuation to lower levels are a continuation to lower levels. It's a higher probability that we continue down. Depending on your trading style, you can trade oversold bounces, but it's a short-term trade. You know, we might just become really, really oversold. You become a buyer, we bounce up 10, 15, 20%, and then that's your trade. You know, that's a different thing. But if we're talking about a trend reversal, you can't predict a trend reversal when we keep making lower lows. So catching a falling knife, you kind of really need to know what you're doing. But yeah, crypto market cap looking shitty. Overall, no bueno. Volume, just no interest. Nobody cares. Nobody cares about crypto right now. Whatever the whales are waiting for, whatever the institutional interests are waiting for, has not yet happened. So we're going to have to just wait for them to be okay. The composite operator, we follow the composite operator, we follow the whale, and the whale is not active, so we should not be active. Do you have any tips against trading ignoring primal emotions like fear and greed? Well, in the beginning, lowering your position size. So if you're overcome by emotion when you're trading, lower your position size so that you can train your body to be a little bit more adept to those, to controlling those emotions. If you're struggling to sleep because of your trades, I forget who said it, but it's a fun little saying. It's like, you know, what is the perfect position size? The perfect position size is getting to the point where you can't sleep and then taking some off the table. So you want to have enough skin in the game that it's worth your while, but you also want to be able to sleep at night, and you don't want to have to, you know, wake up at 3 in the morning and reach for your phone to get a Bitcoin quote or something like that. So controlling your emotions starts first with just becoming comfortable with the technicals, becoming comfortable with understanding the probabilities, and becoming comfortable with the fact that the market is random and you're just trying to, you know, develop a strategy that will give you a perceived edge inside of the randomness. Submitting to the fact that it is random will help you a lot, because it's going to adjust your strategy. You're not going to go all in, you're not going to go all out. Take a look at some hedge fund managers and how they structure their portfolio and see what they're doing. They hold large percentages of cash, they hold large percentages in indexes. So if you're all exposed to high risk altcoins, I mean, good luck. A lot of being able to control your emotions is being able to structure your portfolio in a way that allows you your personal ability to handle your emotions. It allows you to be able to handle it. So however you need to structure your portfolio to the point where you no longer care, that's the perfect portfolio for you. Okay. Your father would say the perfect asking price is when your customer curses but still signs the contract. I like it. Yeah, you could set some stink bids there, Patrick. Set some limit orders. Why not? I mean, if you're happy to be a buyer at those levels, like let's say Bitcoin goes to 20K and you're happy to be a buyer at 20K, even if you go to lower levels, that's entirely up to you. If you're in a long-term investment thesis and you believe in the long-term roadmap for Bitcoin, and you think that $20,000 is a steal, even if we go down to, let's say, something crazy like 9, if you think 20K is a good deal, then yeah, I mean, you can step in as a buyer and do so. That's fine. You always have a realist perspective. It's refreshing to see that on YouTube. Thank you. Thank you, Eric. Is there any day trading in your group? Yeah, we have a few individuals who are day trading for sure. We got some very experienced guys who are good at day trading, and we got some other guys that are doing their best. 1 to 2 years may not be long enough if you're just wanting to place bids without caring of the outcome. A long-term investment thesis is like 10 years. My ledger, I'm going to accumulate certain assets for well over 10 years. And it's just, the point is to accumulate assets over time. I'm a young guy. I've got a lot of time left in my investment, world. So, you have to start accumulating assets, whether it's real estate, whether it's gold, whether it's crypto, whether it's indexes, whatever the case may be, accumulate assets while you can. So yeah, SB official, we do have day trading. And if you are interested in learning day trading, we have the ability to teach you certain techniques to day trade. But yeah, when you're in the chop, it's really all you can do. What I would like you to kind of understand though is when the trend flips bullish, there's really no point in day trading. When you're sideways, day trading can be good. It can be a way for you to kind of distract yourself and, keep yourself busy while trading. You can do those short swings. But when we start trending again, now you go back into swing trading. Swing trading is really what I teach mostly in the group, but you will have access to resources to help you kind of determine a strategy that works for you in terms of day trading. The thing about day trading, especially in crypto, okay, so if you're not joining the group, here is a lesson, okay, that I'm going to give you for free that's really going to help you a lot. If your goal is to be a day trader, when you go to bed, when you step away from the computer and you're in a market, it's a 24-hour market, when you step away from the computer, you're in cash. You sit in Tether. You're done, okay? You can't leave trades open as a day trader. It's just a different style altogether. That's why I kind of try to get people to day trade in the equities markets, because there's a trading session. You trade in the trading session, and you have so many day traders in the equities markets that are doing the exact same thing. So you have a flood of liquidity every single day. at the morning bell of the equities markets, you have all the traders that sat in cash getting ready to inject capital. So you get way more price action in the short term on the equities markets than you do in the crypto markets. Crypto is retail driven. You get people just coming in, plopping their money down and waiting. If you want liquidity, if you want price action, do equities. I'm telling you, yeah, like crypto has parabolic moves to the upside, but that's for the swing traders. If you want to do the day-to-day stuff, if you need volume, you need liquidity. And the ebb and flow of liquidity in the equities market is much more favorable for those who want to be a day trader. So, food for thought. I don't know what's your long-term price and probability for Ethereum, Bitcoin in the long run. I think that we could easily see a $250,000 Bitcoin and we could easily see a $20,000 Ethereum. That's given the adoption curve that we have today, given the amount of development that's happening on the networks today. If that remains consistent, I don't think that those price levels are anywhere outside of the realm of impossible. Applying a time parameter to that is something completely different. But as far as a possibility, absolutely. I think that those price targets are more than achievable. We have like 4% adoption in crypto overall in the world. That's nothing. When the adoption curve really kicks in, it'll be crazy. Okay, that's all the time I've got for today. In what time frame? I told you I don't know. It could take less than 10 years. Less than 10 years. I can give you that. I have confidence in less than 10 years, but the market is irrational. The market's going to do what the market's going to do. Suppression can come in, over exuberance can come in. You can't assign a price to a time frame. So anyways, that's all the time I have for today. If you guys enjoyed this content and if you would like to learn more, follow the links down below. Use the coupon code WELCOME to receive 50% off your first month. Come in, try it out. It's $15 for you to try it. A month comes with 12 VIP classroom sessions. So you get one-on-ones, well, not one-on-ones, but you get small group sessions where we talk about specifics to your charts, specifics to your trading style, and really kind of help nurture and mentor you to get to the point where you can be confident inside of this market. So if you are interested, links down below. And until next time, please trade safe. It is a jungle out there. Peace.